Listen to this. Two-thirds of all Bay Area homeowners who currently pay for flood insurance could see their rates go up because of rising sea levels.
Senior investigator Stephen Stock joins us with how that might affect you. Stephen.
For the first time since the flood insurance program began in 1968, the Federal Emergency Management Agency, FEMA, has changed the way it calculates the risk that your home faces from possible flooding. And for the first time, FEMA will be taking into account sea level rise for that calculation. A decade or so ago, when many residents moved into this Menlo Park neighborhood located in the shadow of Facebook headquarters in San Francisco Bay, their developer told them they would not need to buy flood insurance.
They advised us that the house had been elevated to a specific height where flood insurance was not required.
That's why when residents like Claudia Solis got this 2019 letter from FEMA, it came as a total shock.
I was trying to understand how it was possible that there was no need for us to have flood insurance in the past, and how is it possible that all of a sudden it changed.
Under FEMA's new calculations called Risk Rating 2.0, Solis and many of her neighbors who never needed to buy flood insurance before suddenly have to, according to FEMA's new flood maps.
If you live near water, you are going to see your flood insurance go up.
Nick Vinzant is senior research analyst for Quote Wizard, a part of the online mortgage company Lending Tree.
Essentially what FEMA is doing, they are changing the way that flood insurance is priced and regulated. And they're doing that because of climate change.
Vinzant's team estimates that 157,000 California homeowners who currently pay for flood insurance, 31,000 of them living here in the Bay Area, could see their rates go up because of rising sea levels. That's 3 out of every 4 property owners who currently hold flood insurance.
It doesn't matter if you don't believe in climate change. Your insurance company does.
But most definitely it is a factor.
Edie Lohman is the National Flood Insurance Specialist for FEMA Region 9, which oversees operations in 9 western states and territories.
One of the goals of the rating system, the new rating system, is to make sure there's equity in the rates.
The new flood rating, Lohman says, considers how close your home is to water, its elevation, replacement cost, as well as other variables, meaning that some homeowners' cost will go up while others could go down.
Is there more than one flooding source? How big is the flooding source? How high is this building elevated on the natural grade?
Lohman points out that in the past, under the program, a one-size-fits-all model had owners of smaller homes often subsidizing beachfront mansions, and homes built at higher elevations often had to pay for flood insurance even though they were not at risk because the rest of the neighborhood was in a FEMA flood zone.
There's opportunities to be more creative with how we live with flood risk in the future.
Kathy Schaefer, who worked for FEMA for more than a decade before retiring, thinks she has a better idea. While researching her PhD thesis on flood insurance at UC Davis, she became convinced that California should walk away from the National Flood Insurance Program. So I got to be devil's advocate. Isn't this the way insurance works? You pay in, maybe you pay more than your fair share, but down the road when you need it, then the money's there for you. Isn't this how it's supposed to work?
And that is how it should work. But over the long term, you should kind of equal out, right? So that's kind of why we have discounts for older drivers, and people who are younger drivers pay more.
Schaefer's research shows that in the past 30 years, California homeowners paid in almost $5 billion more in flood insurance than they received back in claims. That's why she thinks the state should pull out of the national program and spend that money locally instead of nationally.
My research is suggesting that one way to start is with a community-based insurance program. Where you pool the risk and you pool the resources.
Is that a prudent course of action?
Well, I work for FEMA's National Flood Insurance Program, so of course I'm going to not recommend that as an option. It does flood here, and people should be concerned, and they should have a conversation with their insurance agent about what the risk is.
A lot of our neighbors are very upset.
Claudia Solis still can't believe that she may now have to pay several $1,000s a year for flood insurance when she's lived without it for more than a decade. Right now, Schaefer's idea is just an academic exercise that one small community is considering implementing. It has yet to be tested or proven to work. FEMA's Edie Lohman admits that the National Flood Insurance Program has a long history of inequity and fairness issues. That's why she says this new Risk Rating 2.0 is so important and why it was developed to correct all of that. I'm Stephen Stock, NBC Bay Area News.
Stephen, thank you. And if you have a story for Stephen or anyone in our investigative unit, all you have to do is call 888-996-TIPS, or you can visit our website, nbcbayarea.com/investigations.